Moving on now with the trades. Now let's get a sense of what to expect for the intraday trade. We have Anita Edit with the details, and on the board I see it's a marginal gain there for the NGX at intraday 97,784 points, but it's green anyway.
Yeah, Ladi, first trading day of December, and of course you look at today's
That's the second
third.
Today.
Yes, today's the third, and that tells you that we have just about 27 and a half days left to the end of the year.
Right.
So also counting down, you've always been mentioning Santa Rally. So
Right.
I don't know if this is, we normally say one of the two colors of Christmas, or the two colors of Santa,
Right.
red and green. But this time we're seeing the intraday number picking up from the 0.23% that we saw yesterday. And also we saw that the market had entered 97,000 and above. But this was largely due to, we had that announcement by Waxing Cement, which is a Chinese cement company, making a $1 billion bid for a deal between Swiss building materials giant Holcim, which is also a part of Lafarge. There was that there was that partnership that they had with Lafarge sometime few years ago. So Waxing is making an 83.81% buyout of what Holcim has in Lafarge. So that's actually what prompted the market into the green territory, and it's still going on as we speak now.
Well, we'll definitely keep tracking that deal for sure.
Yeah, you're going to take the stock market, so I'm sure you're going to give more details about that and so many other factors playing into the market for the start of the first trading week of December. Okay, so now let's get more details of the intraday market numbers for major markets across the world. We actually track about 4 regions within the world, and we always start off from African continent, where we see the NGX all-share index, like we were mentioning, by a tad 0.05% in the green for the intraday numbers, and market numbers we'll be looking out for at 2:30, the close of trading for Nigerian time. Johannesburg Stock Exchange all-share index 0.78%. And of course, it has also climbed in from the 85,000, which we saw yesterday at intraday and for the close of Monday's trading session, and into the start of intraday trading session, 86,397.88. That was the last track that we had for the Johannesburg Stock Exchange all-share index on the African continent. And for the other 2 markets within the African continent, it looks like the greens have it for major markets for the African continent. EGX 30 for Egypt, 0.21% intraday market number, 30,589.34 for that market index. While for the Nairobi Stock Exchange all-share index for the close of Monday's trading session, yesterday we saw the market number at 111.57, but now the 0.51 at intraday. But at intraday for today, it's 112.74, up by 1.08%. That's the last track that we had for the market on the African continent, up for the Nairobi Stock Exchange all-share index. Okay, so now let's get a closer glimpse. Yesterday we had the Debt Management Office conduct the second Eurobond issuance for Nigeria. That's after a 2-year hiatus, but we saw that it was largely oversubscribed. It's all over the newspapers now, or all over the news via the internet. Everywhere you search, we even had that story that Nigeria's Eurobond was oversubscribed by about $9 billion. The offer was $1.7 billion, but the government was able to allot $2.2 billion. And this adds to like a potpourri of debt instruments from the federal government, talking about the Sukuk, talk about the domestic dollar bond, talk about the FGM bond, and now talk about the Eurobond, always oversubscribed. And then so we'll get a market analyst to tell us more details about why this the Nigeria's debt instrument, the federal government's debt instrument, is always having this oversubscription. It is actually a good deal, or it's a positive move for the economy. But why is this always being oversubscribed? To give us more details on that, we have Odinaka Nwokonkwo, fixed income dealer with Access Bank, to give us details on that. Thank you for joining us, Odinaka.
Hi, Anita. How are you?
I'm fine. Thank you so much. So I'm sure, we saw Chapel Hill are the ones carrying out these transactions of the Eurobond, $1.7 billion Eurobond, which was oversubscribed. Now, tell me, what is the center of attraction for Nigeria's debt instrument, particularly with this latest Eurobond bond offer by the Debt Management Office?
So, like you said, yesterday, Nigeria was able to raise 2.2 billion across two instruments, 2029 and 2031 and 2034. When you look at the rate, it's a 6.5-year instrument and a 10-year instrument at 9.625 and 10.375. When you ask why Nigerian instruments are always oversubscribed, I think we have to look at three things. The first one is, what is the size of available sub-Saharan African bond, Eurobond? I think the three major ones are the Angola, Egypt, and Nigeria. So when you look at the depth of that market, it's just these three papers with Kenya having a bit and the Ghana that just defaulted. So for any asset manager, hedge fund, PFA, global PFA that wants to pick up yield, I think you have limited options across the sub-Saharan Africa. So it's either you go to Angola, you go to Egypt, and you go to Nigeria. At least these are the ones trading actively in the market. Also, you look at the yield pickup. For yield, I think the guidance on that, the IPT, when they released that circular, it was around 10.125 on the 6.5 and 10.625 on the 10-year. While the secondary market on the equivalent 2029 paper is around 9.7. So when you look at that guidance, it gives you that, it tells you that everyone will likely jump at that offer. Looking at the yield is quite attractive. The Nigerian 33 closed yesterday around the 9.9%, and you have a new issuance around 10.3. So that's quite very attractive. Then the third, you have to talk about what is the global outlook for interest rates. When you look at the global outlook for interest rate, considering what Trump has been saying about tariff, you kind of see that there's likelihood for maybe inflation to kick up in America. But however, there's also that when you look at the precedent, the Fed has cut interest rates twice this year. So as that is happening, you keep seeing that desire to be able to take up decent yield elsewhere. So those are the cumulative factors that kind of drive investor sentiment around bidding for some of these instruments.
Quite interesting. Okay, so now my next question is, okay, with all of this, what is the overall impact of this Eurobond issuance oversubscription to the general economy? We know that, yes, it's supposed to partly fund the deficit in the 2024 budget, but what does it entail for the entire economy?
So when we look at the Eurobond issuance, right, it shows that there is a growing investors' confidence in Nigeria. That is not without a doubt, although at a very a bit of a high cost. I think even when you look at this Nigerian treasury bills, you'll see it around a 30% yield. And also, we can't deny the fact that there is improved FX liquidity in the market, though the rates may be a different conversation, but there's a bit of transparency and liquidity that is commendable from the central bank's side. So what we'll be talking about is a proper integration of the fiscal side with the monetary side to be able to drive down inflation, which is the key thing that kind of drives these interest rates. We saw the last MPC where the CBN governor still cited the fact that inflation is still high at 30.88, and they hiked that rate by 25 bips. So that is still a major concern, the rate. So a bit of a proper integration with the fiscal side should be able to drive down this process. When you look at the last GDP report, Q4, the growth was about 3.46. But something quite interesting was that most of it came from the service sector. I think the financial and the insurance sector contributed around 30%. And the manufacturing sector, a mega 2.18. So that's a very big concern. And this will be attributed to the high interest rate environment we are currently in. So those are the things you will be seeing, saying that how this impacts the general outlook. So generally, the high interest rate environment is kind of still very affecting the manufacturing sector. But two things we can't deny: improvement in FX liquidity and also growing investors' confidence in Nigerian paper. Those two things cannot be denied.
But Inaka, it's quite interesting, and we would like to know how the U.S. Next week that the U.S. Fed will be meeting on the 17th and 18th, as I cover about some 2 weeks from now. So we'll get to see how that will affect the global, the fixed income markets as well as other instruments. But thank you so much for your time on the show.
Thank you.
That was Odinaka Nwokonkwo, a fixed income dealer with Access Bank. Okay, let's talk about the Middle Eastern markets, which are mostly in the green. They were actually mixed, but then the numbers are still changing. And why this is because the oil markets, some of the oil markets are at some point going back and forth. So, and they're looking up to the OPEC meeting, which is scheduled to hold in the next, in just about 2 days from now. That's on the 5th of December, which was actually shifted from Sunday, December the 1st to Thursday, December the 5th. So that's why some of the markets here are in the green, particularly the Dubai index 0.50%, while the Abu Dhabi was down by 0.28%. For the other two markets within the Middle East, we see Saudi Arabia and the Qatari Stock Exchange Index printing that the same sentiment that we saw on the other two markets within the United Arab Emirates. So that's it for the Middle Eastern markets. And from the Middle East, we go over to the US, where we see stock futures, a little change. We saw the Dow Jones Industrial Average closing Monday's trading session in the red, and it's still picking up for the stock futures ahead of the opening numbers for Tuesday's trading session, while the S&P 500 and the NASDAQ, well, they maintain their highs. Both indexes, they touch all-time fresh intraday highs and close at record level, which is what you see here, 6,047.15 for the S&P 500, while the NASDAQ index, 19,403.95 for the intraday, also for the stock futures. But for the Dow Jones Industrial Average, it lost about 0.29% previously, and this is what we see. So, well, what are traders looking out for? First, they'll be looking out for the jobs opening report, which is due later today. And then the main event will be the November payrolls data, which is scheduled to be released on Friday, just about a couple of days from now. And also, they will be monitoring. They'll be monitoring some comments from U.S. Fed governors. Two of them, both today and tomorrow, and that will also give more like a precursor to the Fed meeting, which is scheduled to hold in about 2 weeks from now. So that's it for the U.S. markets. And finally, for the Asian markets, we see a higher closing from the major bourses that are tracked on the Asian markets. We see the Nikkei 225 climbing back to the 39,000 points. Yesterday, it was about 38,000. But with the 1.91, almost 2% gain, we see it roaring back into the 39,000 points. The Kospi All-Share Index for the South Korean markets, that was up by 1.80%. All of them tracking that strong gains that was recorded on Wall Street. And of course, at the same time, we also see that South Korea's inflation rate, it climbed in November to 1.5% year on year, and that's higher than the October inflation numbers reading of 1.3% and lower than the 1.7%, which was expected by economists. So we're talking inflation in the US, in South Korea, in Japan, in China. Inflation is still something to consider. But talking about the Chinese market, let's see how that market closed for Tuesday's trading session. It was also in the green. So most of the markets across the Asian continent, across Asia, they were in the green, including India's. Okay, sorry, Shanghai closed in the red, as well as the Nifty 50, and they're also battling inflation. So, Ladi, that's a wrap for the market intraday and the close analysis.
Quite interesting, the developed economies cutting rates in 2024. It remains to be seen what plays out in 2025. Are we going to see inflation rear its ugly head again in most of these markets?
Ladi, I think I tell you for free, because I've had my own crystal ball for 2025, and I think the Trump threat is getting much more. I think it's becoming much more obvious.
Right.
And let's not forget that inflation and high interest rate dominated the better part of 2021 up until, I think, towards the later part of 2023, before we now began to see that moderation. So it just might have a comeback in 2025.
Inflation comeback.
Hope not about that. But let's
definitely, we'll keep track of that. Thank you so much, Native, for giving us most of those details. And